Good afternoon. Today we're going to explore an instrument that, if you squint hard enough, looks like a bond, but functions like a time-traveling Bitcoin vault for the ultra-rich. It's called STRD, or STRD, Dormant Dragon Dynasty Bitcoin Warrants. Yes, the name is dramatic. That's the point. You don't name a trust fund after a squirrel. This isn't some DeFi gimmick. It's a US-compliant, CUSIP-traded, IRS-robust mechanism designed to turn $40 of fiat into a discrete dynastic claim on Bitcoin without triggering taxes, dilution, or a call from your compliance officer. It's for old money that wants to stay old money and secretly front-run the next monetary regime. STRD is my idea for the next capital vehicle issued by Strategy through a segregated Cayman SPV, because of course it is. There are certain neighborhoods where you don't put the Bitcoin next to the rest of the furniture. We'll go deep into the structure, the tax advantages, the investor profiles, and the strategic implications, but at a high level, STRD is a prepaid forward contract that gives you exposure to Bitcoin today. It lets you defer all recognition for 15 years and ultimately allows your heirs to choose between hard money or hard cash with all the legal gymnastics already baked in. And if that doesn't sound great enough for you, it also helps Strategy acquire more Bitcoin without issuing a single share. Let's jump into how it actually works. Let's unpack the dragon, folks. STRD is a zero coupon, tax deferred, estate optimized, long duration derivative that delivers one of two things in year 15. Number one, 0.001 Bitcoin delivered to a whitelisted wallet or $100 cash, adjusted for inflation using CPIU times 1.5. For context, that $100 floor is like asking, here's a bond that gives you the upside of Bitcoin, but if it all goes to hell, we'll still hand your descendants enough cash to buy something more meaningful than a used Peloton. Now, structurally, this is a prepaid forward contract, a PPFC. That's very intentional. Why? Because zero coupon debt creates phantom income. Phantom income creates angry clients. And angry clients fire their estate attorneys and call Blackstone. By using a PPFC chassis, STRD avoids original issue discount, so there's no taxable accrual, no K1s, no Schedule B voodoo. You buy it, you forget about it, and your accountant never calls you in a panic. It's a feature, not a bug. STRD is issued through a segregated SPV domiciled in the Cayman Islands. Why Cayman? Because they have better beaches and better accounting treatment under ASC 810. By keeping the SPV deconsolidated, Strategy doesn't book the Bitcoin on its balance sheet. It gets the exposure, it gets the Bitcoin per share lift, and yet it dodges the gap volatility. It's like adopting a baby dragon, but making sure it's raised at your cousin's house for legal reasons. Each unit of STRD costs $40 and entitles the holder to 0.0004 Bitcoin exposure today. That's a 15-year ticking time bomb of asymmetric upside wrapped in a structure that dodges nearly every regulatory tripwire. So let's recap. No coupon, no K1, no dilution, no direct custody, and no income until you choose to settle. Ladies and gentlemen, this is a Trojan horse for dynastic Bitcoin accumulation, and unlike most Trojan horses, this one won't get flagged by your general counsel. Let's get something out of the way. STRD is not for Reddit. It's not for Robinhood. It's not for your cousin Chad, who just maxed out a personal loan to buy Solana NFTs. This is for real money, old money, and institutionally trapped money. The kind of capital that has 3 family office consultants, 2 offshore trusts, and a vague memory of what their grandfather did during the Eisenhower administration. So who is STRD built for? It's tailored for 5 high-intent investor archetypes. Number 1, estate-focused, ultra-high net worth families terrified of the 2026 estate exemption cliff. 2, K1 averse investors tired of phantom income on zero coupon notes. 3, institutional fiduciaries who are stuck in regulatory molasses. 4, capital allocators who want exit optionality without mark-to-market chaos. And finally, foundations and dynastic trusts looking for asymmetric upside without volatility optics. This is not spray and pray finance, it's bespoke asymmetry built for capital that doesn't want to be seen until it wins. So now let's walk through the first and the most urgent use case, estate planning for the ultra wealthy. All right, let's talk about the biggest risk to generational wealth in the next 24 months, the sunset of the Tax Cuts and Jobs Act. In 2026, the US estate tax exemption is projected to drop to $7 million per person. That's less than 100 Bitcoin at today's price. If Bitcoin does what many of us believe it will, that exemption covers maybe one hardware wallet. Now, imagine your Bitcoin stack appreciating depreciates 10x between now and the time of death. Without proactive planning, that's tens of millions in taxable estate bloat, subject to 40% estate tax. Enter STRD. By using STRD units inside TOD registrations, GRATs, IDGTs, or other estate wrappers, families can gain synthetic Bitcoin exposure today, avoid realization events, defer tax for 15 years, and pass assets with a stepped-up basis at death. In simple terms, you lock in exposure without inflating your gross estate, and your heirs either receive Bitcoin or cash without triggering gains at transfer. And remember, STRD is structured to behave like a fixed income note, not a crypto asset. That means it's estate planning friendly, and it's already been cleared by tax counsel to avoid 1259 constructive sale rules. Put differently, STRD is like hiding Bitcoin inside a trust fund and wrapping it in a T-bill costume. You get all the growth, none of the tax, and heirs get a clean handoff, Bitcoin or dollars, depending on how the next 15 years play out. It's a weaponized estate vehicle. Now let's talk about something that gives ultra-wealthy investors night sweats: phantom income. You buy a zero-coupon bond, it pays nothing today, you receive nothing, but come April, the IRS insists you owe taxes on what exactly? The concept of money? Welcome to OID hell, original issue discount, a Kafka-esque punishment where you get taxed on pretend gains from instruments that haven't even matured, haven't paid, and may never do either. Now picture your average tax-sensitive client, maybe a retired founder in Florida with 19 shell corporations and an allergy to complexity. You hand them a strip and a K1 and they'll hand you their resignation. STRD solves that with precision. It's structured as a prepaid forward contract without debt. That means no OID, no annual income recognition, and most importantly, no K1s. No 1099s, no just trust me footnotes on line 12. In other words, tax deferral done right. And let's not forget the client optics. It looks like a bond, it acts like an option, but it files like a ghost. STRD doesn't even show up in your tax return until the day you decide to realize it, whether that's in year 6, year 15, or after you die. Your timeline, your terms. If your family office chief investment officer has ever complained about a Schedule B footnote being longer than War and Peace, STRD is your peace treaty. Let's switch gears. Not every investor is a free-roaming individual. Some are institutional fiduciaries, endowments, pension boards, 40 Act fund managers. Their problem isn't conviction in Bitcoin, it's compliance. Even if they love Bitcoin, many can't buy it due to charter restrictions, custody limitations, audit committee optics, and sometimes just the terror of explaining cold storage to a 72-year-old board member named Gerald. So what do you do when your chief investment officer wants Bitcoin, but their policy statement screams, "Don't you dare"? You give them STRD, a bond-like CUSIP-traded instrument with segregated Bitcoin collateral in the Cayman SPV, fully audited and ring-fenced. Let's break that down. STRD units are CUSIP eligible, so they trade just like structured notes. The underlying Bitcoin is held in an SPV, not on Strategy's balance sheet, which keeps auditors calm. There's no private key management, no digital wallets, and absolutely zero late-night panic calls about multi-signature setups. From a GAAP perspective, it's book entry clean with ASC 810 deconsolidation treatment. That means institutional fiduciaries get synthetic Bitcoin exposure, no custody headaches, clean financial optics, and a compliance trail that passes the sniff test with the Big Four. If you're a trustee with hard constraints but soft conviction, STRD is your loophole in a tuxedo. Let's talk about liquidity. In traditional finance, early liquidity is like a double-edged sword. Useful if handed properly, catastrophic if rushed. Most structured notes break the moment someone tries to exit early, creating mark-to-market losses, audit panic, and redemption waterfalls. That's why we designed STRD to be boring in all the right ways. Starting in year 5, STRD holders can redeem up to 1% of outstanding units per quarter. But here's the key though, through reverse Dutch auctions. What does that mean? Investors submit their desired redemption prices, Strategy selects the most favorable tranche, the lowest bidders win, and everyone else waits. This creates orderly exit behavior, price discovery, and avoids run-on-the-bank dynamics. No redemption cliffs, no market disruption, no forced asset sales. And when year 15 arrives, we open the jumbo redemption window. At that point, investors can take Bitcoin delivery, take the cash equivalent, or roll over into whatever second generation instrument we launch in 2040. Perhaps Strive, the Omega note, which lets you redeem for a villa on the moon. Importantly, cash redemptions are not funded by selling BTC. They're financed via senior secured note issuance, meaning Strategy's treasury remains untouched. BTC's redemptions, however, those permanently remove supply from circulation. It's deflationary by design. So, we've built a system where exits are gentle, treasury remains intact, and redeeming in Bitcoin actually tightens the supply and reinforces Bitcoin's reflexive price mechanism. This is liquidity with discipline. Now here's where things get fun, folks, because this is where Stride graduates from clever to downright lethal as a capital strategy. Let's say you're a foundation, chief investment officer, or an estate planner. Your client wants Bitcoin upside, but they also need downside protection. They can't risk volatility wrecking their endowment forecast or triggering impairment charges on the books. Stride solves this with one simple phrase. You get the greater of 0.001 Bitcoin or $100 in cash adjusted for inflation. That $100 floor, remember, is indexed to CPIU times 1.5, so it keeps pace with real world purchasing power plus a cushion. We call this the Dragon Horde floor because it guarantees no matter what happens, whether BTC goes to $10,000 or $10 million, your worst case scenario is a full inflation protected capital return. If Bitcoin moons, you redeem for 0.001 BTC. If Bitcoin lags or the world melts down, you still get a cash floor immune to nominal erosion. Now combine that with its accounting profile, it behaves like a bond on your balance sheet. It embeds a call option on the Bitcoin upside without mark-to-market exposure, without income leakage, without triggering OID taxation. Stride is the holy grail for capital allocators. Optionality without volatility. If Michael Burry and Ray Dalio had a secret baby and raised it in Switzerland, it would grow up to be this product. Up to now, we've talked about why Stride is a killer product for investors, but let's get selfish for a minute. What's in it for Strategy? The answer is simple and glorious. We acquire massive amounts of Bitcoin without issuing a single share. Let's break that down. Number one, massive Bitcoin acquisition without dilution. Each $40 Stride unit buys Bitcoin at spot, but unlike a secondary equity raise, it does not inflate the float. It doesn't hurt EPS either, and it doesn't trigger a dilution tantrum from existing shareholders. We all know we've seen plenty of that happening. That's BTC per share accretion with zero equity overhang. This is a stealth balance sheet weapon. It's like finding a way to issue bonds in exchange for gold, except the gold is digital and the bond is legally invisible until redemption. We could buy hundreds of millions in BTC via Stride issuance without ever touching the common stock. Number two, liquidity control via dual redemption design. When Stride matures and investors choose cash, we don't fund that by dumping Bitcoin on the open market. Instead, we issue senior secured notes, traditional debt, predictable, modelable, ratings agency friendly. BTC redemptions, even better. Those coins get removed from the circulating supply forever. They exit our treasury and the market simultaneously, reinforcing scarcity and fueling the reflexive flywheel. In essence, we've built a tool where redemptions either leave BTC untouched or make it even more scarce. It's Bitcoin accretive on both sides of the liquidity event. That's brilliant. This is where the big picture comes into focus. Stride is a signal. It tells the market we're not passengers on the Bitcoin journey. We are engineering the rails. With Stride, Strategy is positioning itself not just as a Bitcoin treasury, but as the architect of Bitcoin capital markets. And the product ecosystem proves it. Strife is for yield seekers who want regular income, but don't want to touch cold storage. Strike is for upside chasers who want leveraged torque on Bitcoin appreciation. And Stride is for stealth dynasties who want long duration, tax optimized Bitcoin without spooking their estate lawyer. This is a product suite that mirrors the psychology of the global wealth ladder. And what does that create? A moat. Other public companies can try to follow our strategy, but few can build instruments like this that hit every investor vertical with precision: tax, legal, compliance, optics, and execution. While they're still figuring out how to convince their board to buy spot Bitcoin, we're issuing forward contracts that will liquidate fiat dynasties in 2040. And if you don't think that's a moat, ask yourself this: Who else is building a legally watertight, estate-optimized, CUSIP-traded Bitcoin note with a synthetic bond profile and reflexive redemption mechanics? Exactly. Let's shift from innovation to institutional acceptance, because it doesn't matter how brilliant your product is if it scares the Big Four, triggers a flag at the IRS, or makes a ratings analyst cry into their Excel model. STRD was engineered from day one to be bulletproof across every regulatory, accounting, and fiduciary review layer. Let's walk through the 4 major pillars. Number 1, tax authorities. Most structured notes get eviscerated by the tax code. STRD is classified as a prepaid forward contract, and we've obtained formal legal opinions from top tax counsel confirming it avoids 1259 constructive sale treatment. It avoids original issue discount accrual. And taxation is deferred until realization, either redemption or secondary market sale. That's clean deferral with 0 phantom income. No K1s, no nasty IRS surprises, no accountant rage quitting on April 13th. From an accounting standpoint, STRD's magic trick is the segregated Cayman SPV. Because under ASC 810, it's deconsolidated. That means Strategy doesn't have to book the Bitcoin it acquires via STRD issuance. There's no balance sheet volatility and no quarterly mark-to-market impairment noise like we saw under the old FASB regime. Auditors love it. It keeps the core financials pristine while letting us expand BTC exposure in the background. STRD isn't just friendly to CPAs, it's calming to S&P, Moody's, and Fitch. Redemption caps prevent sudden liquidity cliffs. Reverse Dutch auctions allow orderly offboarding. And cash redemptions are debt financed, not asset solid, preserving treasury stability. The result is that agencies can model redemptions like a laddered liability, not a ticking time bomb. And SEC and SIFMA optics. STRD is CUSIP-traded, meaning it flows through traditional capital markets infrastructure. No DeFi contracts, no wallet risk, no shady jurisdictional hops. It fits into a Bloomberg terminal just like a corporate bond. And for asset managers under the 40 Act, that matters. It fits into their book entry systems, passes their compliance filters, and doesn't trigger portfolio mandate violations. STRD is a structured note dressed in a 3-piece compliance suit. Now let's talk tail risk, because when you're building a 15-year time bomb of capital asymmetry, you better have safety strapped to every surface. Here's how STRD neutralizes the 4 most obvious systemic threats. Number 1, Bitcoin price collapse before year 5. If Bitcoin were to crash in the early years before redemptions even begin, we have a collateral top-up covenant in place. Alternatively, Strategy could issue Dragon Notes, short-dated structured debt designed to rebalance the BTC coverage ratio inside the SPV. This preserves redemption integrity while locking in long-term coin ownership. Number 2, Congress nukes the step-up basis. You can always count on Washington to ruin a good estate plan. If the IRS repeals step-up at death, we've planned for that too. STRD includes a basis adjustment clause that allows heirs to receive additional BTC units upon redemption to offset unrealized capital gain exposure. The translation: even if the rules change, the family still wins. Number 3, regulatory reinterpretation of PPFCs. If the IRS or the SEC remove the goalposts on PPFCs, we're already positioned. STRD will pursue an early private letter ruling supported by counsel from one of the leading firms in structured product taxation. We're not reacting to policy changes, we're preemptively immunizing against them. And what happens if a wave of holders suddenly want to redeem for cash? We've secured a pre-committed standby senior note facility ready to deploy debt capital on demand. Additionally, Strategy can use short-term BTC call spreads or option overlays to hedge redemptions without selling coins. Liquidity is covered, coin stack is untouched, and panic is off the table. STRD isn't just optimized for performance, it's armored for chaos. It sidesteps taxation, anticipates regulation, preserves liquidity, and absorbs volatility before it even touches Strategy's main balance sheet. This is wealth structuring for a post-fiat world, with the kill switches already built in. We've covered the structure, the tax advantages, the compliance layers, and the strategic alpha. But let me show you what this looks like in the wild. Meet a $400 million family office, multi-generational, US-based, with $100 million specifically earmarked for dynastic transfer. They're not Bitcoin skeptics, they're conviction holders, but their problems are familiar. They can't take direct custody, they don't want to trigger estate bloat, and they need to defer tax, maintain compliance, and retain optionality. So we structure a $10 million STRD allocation. That buys them 250,000 STRD units, which at current levels translate to 100 Bitcoin exposure today. Now what happens? No current tax, no private key custody headache, Bitcoin basis steps up at death, and there's the future payout optionality. The heirs choose either 250 Bitcoin or an inflation index $25 million in cash. All of it outside the estate tax kill zone and fully compliant with their family office governance framework. And the best part, the family looks like they're holding a boring fixed income instrument while secretly front-running the collapse of fiat. Now multiply this by hundreds of family offices across the US, the Middle East, Switzerland, and Singapore facing the exact same estate tax bomb. That's the market. That's the use case. And that's why STRD will not stay quiet for long. Let me leave you with the thesis. STRD is a stealth wealth vehicle that converts legacy capital into Bitcoin exposure without tax drag, without audit friction, and without triggering fiduciary alarms. It's a bridge between dying empires of paper wealth and the emergent hard cap economy. It is a mechanism of capital liberation. It bypasses the IRS without breaking the law. It accumulates Bitcoin without triggering dilution, and it fits into old systems while silently aligning you with the new one. Whether you're managing a family dynasty, a charitable trust, or a sovereign wealth fund, STRD is how you participate in the Bitcoin age without having to explain cold wallets to a 9-person investment committee. STRD is the vault key for a new financial epoch designed as a fixed income note. Thank you. Soon we can talk implementation strategy.